Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Higher interest rates are not good for real estate investment trusts, or REITs for short, because it increases the cost of borrowing and eats into profit margin. High interest rates and inflation also make it difficult for tenants to pay their bills, including rent. This isn't the case with Postal Realty Trust Inc., traded on New York Stock Exchange under symbol PSTL. John?
Thanks, Mo. Yeah, Postal Realty Trust is the first and only publicly traded REIT focused on leasing properties to the United States Postal Service, or USPS. The company's diversified real estate portfolio is comprised of 1,543 properties across 49 states and one territory, with approximately 6 million net leasable interior square feet. Now, that's equal to 104 NFL football fields, for comparison's sake. Now, the company's owned portfolio is 99.6% occupied, with a weighted average rental rate of $9.47 per leasable square feet. So that just, kind of shows you how much money they're generating. Admittedly, you might think mail is going the way of the dodo, but the USPS is home to critical infrastructure that supports e-commerce and last-mile delivery. Companies, in fact, like Amazon, UPS, FedEx, and DHL all tap into the USPS's logistical network every day. And this helps explain why the USPS's Parcel Select service has expanded at a pretty stellar compound annual growth rate of 17.4%. since 2013.
2023 momentum has carried into 2024.
Yeah, the company announced that revenue increased 14% year over year to $17.2 million in the first quarter. Net income slipped to $206,000, or a loss of 1 cent per share. Meanwhile, funds from operation increased to $5.5 million, or 20 cents per share, while adjusted funds from operation grew to $6.9 million, or 25 cents per share.
And this enabled the company to increase its quarterly dividend to 24 cents per share.
Now, as a REIT, Postal Realty is legally required to distribute at least 90% of its taxable income to investors. Not only is Postal known for its attractive return profile, but it has also increased its dividend every year since its 2019 initial public offering. That only tells part of the story. More impressively, it actually raised its dividend for 15 consecutive quarters, from 0.063 cents per share in July 2019 to 0.2375 cents per share in February 2023. They increased it to 24 cents per share at the start of 2024 and has maintained it at that level since then. This works out to an annual distribution of 96 cents per share for, as of this recording, a current yield of 6.76%. And that dividend payout is safe too, again, easily covered by the third quarter adjusted funds from operation of 25 cents per share.
The outlook for PSTL stock remains solid.
Well, one would think that solid financial results, 100% rent collections, and a growing portfolio would lead to big share price gains, but that hasn't actually happened, really. Postal Realty stock has, for the most part, been held down by broader sentiment about the REIT industry. Before the start of July, this past July, Postal Realty stock was down 7.5% year to date. But since the start of July, PSTL stock has rallied, as of this recording, an impressive roughly 7%. Now, why the big moves? There's no real definitive reason. The company hasn't released anything. But on the plus side, economic data shows the economy is cooling and isn't likely to tip into a recession. As a result, the market is only pricing in an economic slowdown. Now, a cooling economy increases the chance of an interest rate cut. The odds of an easing in September jumping to 79% from 66 cents before the data was released. A rate cut means borrowing becomes a little cheaper, which should improve profitability and also increase consumer spending. This might explain why PSTL stock has done well since the start of July. Well, will it be able to hang on to these big gains or grow further on them? Big jumps tend to result in short-term profit taking, but time will tell, of course. Regardless, the outlook for PSTL stock is pretty solid, with Wall Street analysts providing a 12-month median share price target range of $15 to a high of $16 per share.
John, thank you so much for your insights. The only publicly traded REIT focused on providing lease to USPS, Postal Realty Trust Inc., is well positioned to consolidate the large, highly fragmented market. It has a large and growing real estate portfolio and has collected 100% of its rent. Thanks to its reliable tenant, it does not have to provide tenant improvement allowances or free rent when it renews leases. USPS leases are also not subjected to annual budget appropriations. Its leases are also protected from inflation. The 5-year lease duration allow for the opportunity to renew and market rates. Tenants are responsible for a portion of expenses increases. Most leases renewal include annual rent escalation. Moreover, renewing a lease is more economic alternative than move to a post-build-to-suit option. Taken together, these dynamics provide Postal Realty with a reliable income stream, which helps it support reliable, growing, high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.